Wow, these home prices are off the charts. We're hitting record territory, folks. I mean, and policymakers are pretty nervous in Washington about what this runaway price of homes actually means. And it's single-family homes. That's what we're talking about today on the show. So welcome into the Real Estate Investor Show. This is the show where we help you become a more intelligent real estate investor. I'm Clayton Morris. I've done thousands of real estate deals over the years, and I'm the founder of the company called Morris Invest. We're a full-service rental real estate company. So before I get started, I want to give away something for free. Right here on the page. If you want to take part for free in our 90-day financial bootcamp, really helps you get set up for success for understanding your finances, understanding your performing assets and liabilities, and gets you set up to become a real estate investor totally free. Go to morrisinvest.com/bootcamp to get your free download. And we put a lot of work into it, so grab that for free. All right, let's talk about real estate today. Let's talk about these home prices. So look at these home prices today. These are most recent numbers here where we have these home price gains, most since 2013 that we saw in January. Year over year change in the median home sale price. Look at that. Absolutely off the charts. Now, there was a lot of fear. I mean, I have to admit, I was nervous. Like, what's going to happen in real estate during this pandemic? What is going to happen here? We didn't know. Like a year ago, we were all sort of sitting there scratching our heads. Is the end near? Right? Should we have to get on a rocket ship and go to Mars or something? Because who knows what's going to happen? It turns out, though, people decided that the home they were in maybe wasn't up to par. They were living at home. They said, this now that we're home all the time, this space isn't sufficient for our kids. They're homeschooling. Is this going to be the new normal? So a lot of people decided to list their homes, and homes are selling within minutes. Listings are happening where people are getting 6, 7, 8, 9 bookings immediately to list their homes. Homes in vacation markets where normally there'd be maybe one person interested in buying the home if you're lucky. Now they're getting into bidding wars in the Hudson Valley and upper Pennsylvania, in the Pocono Mountains, etc. So people leaving New York City wanting to get out to the countryside, and there's bidding wars for these houses. So what was going to happen? We didn't know, but it turns out people really wanted to make a move. We are seeing the migration patterns away from the big cities. We're seeing expanding areas, like where we're building our properties and so forth, and in expanding areas where you have a better tax basis for business, where you have growing jobs, where you have lower crime, where you don't have that 2-hour congested commute into San Francisco, getting away from that craziness. So there's a lot happening right now in housing, and it has policymakers pretty upset or a little nervous. This is an article today on Politico. The last time the U.S. saw such skyrocketing home prices, the ensuing crash brought down the global economy. But here's what's different this time, folks. What's different this time is that people are buying homes and they actually can afford those homes. It's still difficult to get a mortgage. But now the people that are buying the homes are people who can afford them, that have employment or self-employed. They have those jobs aren't going anywhere. They can work remotely and they can afford it. What happened in 2008 and 2007 is, of course, people had mortgages that couldn't afford it and actually had no job. And they were able to get loans that were not backed by anything. You don't have a job? Fine. Here's a mortgage. Here's some keys. That's different now. Now, what is happening, of course, is prices are rising. And the reason policymakers are nervous is because first-time home buyers or people that are trying to break into the market for the first time might be priced out of the market. And of course, President Biden is considering that first-time home buyer tax credit of $15,000 so that people could use that towards a down payment. So first-time home buyers, it might be offset by that, which is favorable. But as an investor, even despite the economy's plunge into recession, real estate investors are looking pretty good right now, and they're smelling pretty good. Take a look at these numbers during the pandemic. The value of the U.S. housing market has surged during the pandemic. The total worth of homes in trillions of dollars from January 2017 up to 2021. A result of these rising prices, the total worth of U.S. homes was $32.4 trillion in January, up 10% from just a year earlier. Single-family homes are the most popular, and they're back in vogue again. Listen to these numbers. As Americans spend lots of time inside, according to Redfin, a third, 32% of saved searches on redfin.com used the users filtered solely for single-family homes. When they went in there to search, they're like, no, I don't want a condo. I don't want a townhome. I don't want a multifamily unit. I don't want any of that. I want a single family home with a yard. If I'm home, that's what I want to buy. I'm not working, I'm not driving, I've got kids home. I want space, I want a yard. New construction is skyrocketing. The price of lumber, of course, is going up. The demand for houses right now is off the charts. Meanwhile, the share of searches specifically for like other types of homes, for like condos and townhomes and multifamily listings, much lower. Just 7.5% of the overall Redfin saved searches. 32% single family homes. People are also relocating. And right now they're looking to rent single family homes. Now, as a real estate investor, this is what I want to talk about. The demand for single family, and and I also talk about like duplexes being single family in that way, because like we build at our company where we build duplexes and single family homes. And the reason I kind of lump those together is because the duplexes are like single family homes. They're big, 3 bedrooms, big bathrooms, vaulted ceilings, not a shared driveway. They feel like separate homes. So to me, in that way, I lump that together as single family. The beauty of that is that those tenants tend to stay in those properties for a long time. We were doing a tour of our Lubbock, Texas market just a short time ago, and a lot of the tenants, actually, in one of the big subdivisions of duplexes that we built about 5.5 years ago, almost 6 years ago now, almost every tenant that moved in 5 years ago is still in the house because it's a great school district, brand new construction, great property. We had one property that was in a tenant turnover, and so we were going through it and just doing some checks on it. It looks brand new. And so because it's big, it has that single family home feeling. Well, guess what? That house was already rented. Like the tenant was about to move in a few days because the demand is off the charts. So you want to be investing in these areas where you should, well, first of all, in this market, you should not be investing in an area with a declining with an increasing vacancy rate. I mean, there is an off-the-charts demand for rental properties and single-family homes. And if you're looking at property and you're wondering, like, why is this house vacant? That should be a red flag. No house should be sitting vacant right now. We have a need for over 20 million rental units right now in the United States. Dwellings. We don't have them. So if you're investing or thinking about investing in an area and you're looking at the vacancy rate and you're like, wow, that's pretty high, you should really be scratching your head as to why. Chances are it's because declining jobs, people are leaving, migration patterns, people are leaving. I mean, like look at West Virginia, for instance. They've had a population decline for the last 40 years. So they're trying to do something drastic right now. They're trying to do what Texas has done, which is eliminated income tax. What Florida has done, which is eliminated income tax. So West Virginia, to stem this population decline, is looking now to eliminate the income tax in the state of West Virginia in order to try to create a business boom to bring jobs. So those are the areas we're investing in, those areas where jobs continue to come, Fortune 500 companies continue to come, vacancy rates are low, crime is low, and demand is off the charts. Available inventory right now to purchase is low, really low, which is also increasing the amount of renters. And so what happens is people are waiting. Qualified people who could buy. People could buy. And they are waiting for a home. They're like, yeah, we have to wait for you to build this thing for us. You're going to have to build this for us. So you know what? It's going to take, it's going to take a year. It's going to take 6 months, 7 months. So we're just going to rent. In fact, my mother-in-law is in a very hot rental market right now, a real estate market. And she and her husband are buying a house. They can't even move in until like September. So in the meantime, they're just renting. So the demand for rentals as a stopgap measure is even off the charts. And these are qualified home buyers. And they're willing to pay more for rent in the meantime. So when you look at this data and you see that, policymakers are nervous, what they're nervous about, of course, is that they can't keep up with this demand. And that people aren't going to be able to afford these first-time home buyer properties. And right now there's a lot of people that there's like this sort of the dream of home ownership is going to be out of reach for a lot of people, as Sherrod Brown talks about here. Sherrod Brown says, he's the senator from Ohio. He says rising home prices and flat wages means that many families, especially families of color, may never be able to afford their first home. And that brings me to what the government plans to do, because we got breaking news today from the federal government and the Biden administration, which is putting together this massive infrastructure plan of $3 trillion. And that's the starting price, folks. This is the next stimulus. And this is about to hit. They want to have this thing signed, sealed, and delivered by Memorial Day. Now, what does this matter as a real estate investor? That's why I always try to look through a prism of this, right? If you have stagnant wages, you have a lack of jobs, but you have an economy that Janet Yellen, the Treasury Secretary speaking today, is expected to say that she expects full economic recovery by the year 2022, 1 year away. Numbers, Wall Street's excited. Housing boom is happening. People are hiring. Yet there's of course a subset, 20 million Americans still struggling at the very bottom. And this infrastructure package would bring rural broadband to people, roads, bridges, of course, railroad infrastructure, transportation for buses and rail for people to get to work and jobs. This would absolutely help lower economic Americans. And more importantly, though, there's an aim towards increasing, bringing jobs programs to the United States and employment and elevating people. And so all of this comes together. If the federal government is going to put $3 trillion into the economy for roads, bridges, it helps us as real estate investors. It helps the entire nation to be lifted up. See, I try to be sort of my goal is to be an ethical real estate investor, right? Which is I want to make sure everyone in the circle is taken care of. The contractor, the tenant in the property manager who's taking care of the tenant, the investor who owns the property is making a good return. The neighborhood is taken care of. The property taxes that go to pay the school. When all of those things are in alignment, it's perfect. But when any of those things are out of alignment, like the rent is too high, then that doesn't help the tenant, right? Property taxes are not paid, that hurts the school. Vacant properties hurt the neighborhood, all of those things. Contractor's not paid a lot, he does a crappy job. On and on and on it goes. Investor doesn't make a good return, doesn't invest in real estate anymore. Like all of these things are part of this process. So when we look at these numbers, surging home prices, the most since 2013, inventory at an all-time low, means you put a house on the market, you're selling it in days. Days on market have plummeted. And then the value of overall housing market surging during the pandemic. So there's one more big piece of this that we have to talk about, and that is inflation. The inflation we are about to see in the United States could be remarkable. And it's troubling. But it seems Wall Street's sort of like hedging their bets right now. They're watching where the US dollar is going. Is it going to go above 2%? Jerome Powell, the Fed chief, has said it is going to go above 2%. Is it? When will that happen? That means the value of a US dollar will go down again. And that means real estate, while it's going up and appreciating, is a hedge against this inflation. It's a hedge against this 2%. If you're seeing numbers like this, far accelerated past the rate of inflation, this is why investors are putting their money into real assets like real estate, gold, silver, copper, zinc. I mean, we're seeing an explosion right now of copper. We don't have enough copper. And so, like pushing for that, gold, silver, precious metals, real estate, art, real things, real tangible items. Heck, even yesterday, Jerome Powell said that he felt that Bitcoin was better than gold as a long-term value play. It's not liquid. It's not as liquid as cash, but it's as it relates to gold as being a long-term preserver of wealth. He felt that it was even better than gold. So you're seeing these alternative assets even looking more attractive than the U.S. dollar, in my estimation. So real estate as a hedge against inflation, numbers off the charts, and then on top of that, add into an entire remake of the American landscape with a $3 trillion economic plan, a jobs plan, a child tax credit plan that lifts people out of poverty, roads, bridges, sewer, transportation, railways, everything, internet access, completely altering our landscape over the next few years. So if you're just going to sit by right now, you're just going to sit by and watch this train go right past you, you are missing one of the best and biggest opportunities to invest in real estate and to start building wealth for you and your family right now. This is perhaps one of the best times I can remember to be able to jump into this market right now. So please, I'd love to hear your thoughts on this. Drop me a comment below. And don't forget, grab our free 90-day financial freedom bootcamp. Just go to morrisinvest.com/bootcamp. Download it. It's totally free. And we'll take you through week by week by week, helping you to get to becoming, that stage of real estate investing, understanding your performing assets, liabilities, making you a more intelligent investor all around. And it's totally free. We put a lot of work into it. It's I think a 30-page book, basically, for you to go through. So go to morrisinvest.com/bootcamp right now, and we have a link below in the description for you to grab that as well. All right, I want to open it up for Q&A now. We have a lot of people here today, which is great. See everybody. Let's see. Gregory Jacob says, is now the time to fix and flip in order to save more money for buy and holds later, in your opinion, or is buy and holds just the way to go? Gregory, great question. I mean, I'm not a fix and flip guy. To me, it's very speculative. And it's not, hey, if you've got wealth and you've got buy and holds on the side and you want to do a fix and flip project, there's a lot involved in becoming a fix and flipper. Okay. If you don't know, have you ever renovated a home? Have you ever bought a fixer upper that you have to pull permits and hire the electrical work and rip out walls and make sure that the property is up to code and rip out asbestos and all of those things, asbestos remediation. And the list can go on and on and on. Or can you buy a new construction rental property that's already cash flowing with a tenant in place when you don't have to do anything, and now you're getting the benefits of the tax breaks, the benefits of that, plus the cash flow, and you're building your net worth? I guess it depends on what you can afford and what you want to do. I just gotta say, fixing and flipping a property is a lot of work. It's hard, and you can get burned because things in the market can shift, right? So you might be let's say you're in New Jersey or something, and you buy a home for $400,000, which is like a fixer upper. Okay, so you buy a home for $400,000. You've got a hard money loan that you took out in order to buy the property and then to also pay for the construction. So now you're on the hook for 11 or 12% interest to a hard money lender while you're fixing this place up. You're getting hit with different weather patterns, thunderstorms, snow, whatever. You're having to deal with city permitting issues, and they're telling you cannot work on this property until we've approved the permit for the electrical. And I've seen projects just sit there for weeks. They get a stop work order. They can't do anything. They can't lift a hammer. They can't do anything. They have to wait. You have to wait. You have to wait. Permit approved. Finally, you get to work again. Start it up again. Great, great, great. Then, you bought it for $400,000. You're hoping to sell it for $700,000. That's your profit. That's what you think that this house will sell for today in this market. But what does it look like in 7 months? And what if the market drops, where now your profit goes way down and houses are sitting on the market? People can't get loans all of a sudden. The interest rates go up. They jack up interest rates. And so now what was so attractive at a 3% interest rate now is at a 4% or 5% interest rate, and everyone puts the brakes on. If we don't learn from history, we're doomed to repeat it, right, Gregory? Because remember 2018? sorry, 2019. Do you remember the end of 2018 into 2019? Houses were selling like crazy in the fall of 2018. And then what happened? Fed raised the rates. Interest rates went up right around Thanksgiving of 2018. And all of a sudden, it was like a screeching halt, a 1% interest rate hike, Gregory. And everyone just stopped buying homes. It was like, and it wasn't until the spring when rates started dropping again in March that things started selling again. It was like they pulled it back and suddenly, boom, things started selling like crazy again. And now rates are below 3 and things are selling like hotcakes. So if you can pick up a new construction rental property now that's cash flowing and you're basically getting it for free with like 0% interest right now, I would go for that. Let's see questions here. Brad T. Do you have any thoughts on assuming a mortgage from a seller? Yeah, it's a good strategy. If the deal is right, like it all comes down to the numbers. What you're talking about is buying a property subject to the existing mortgage. So you're essentially saying to a homeowner, you can walk away. I will take over this mortgage, and I'm going to give you a little walking away money, basically. So you're basically looking to find someone who's up underwater. Sometimes you might give them $1,000, to walk away from the house. But chances are, if they're going to do this, they maybe have missed a few payments and they're underwater. And the question then becomes like, is there equity in the property where you can assume the mortgage, pay off this mortgage at a great deal, and then refinance it? The goal would be, of course, you'd want to be able to pay it off as quickly as you could personally and then refinance it. If you knew that you could get equity out of the property and refinance, that would be a great play as a rental property. Some people like the idea too of staying in the property. You might be able to take over the property subject to the existing mortgage and then let that person live in the property renting from you at a lower price, like at a rental rate. So some different ways to play that. I don't think I've ever done that, to be honest. No, I have never personally done a subject to. Let's see here. Gregory, you are welcome. Oh, you said I'm currently renovating my first home. Okay, so you're owner occupying it. Okay, that's different than like finding a off-market property that you're going to get involved in. Totally different. I'll come out with about $20,000 in equity. Yeah, are you going to sell that home? I mean, you might find that you could make a good profit on that home and sell it if you're going to sell it for profit, and then you're going to reinvest that money, maybe rent a place to live and then reinvest that money as a down payment into some new construction or to some rental property. Sean Thompson, 3 weeks ago, I purchased a block of 4 townhouses. Rent is quite a bit lower than it should be. I want to keep all the tenants, but is there a way to raise the rents? Well, I mean, what are the conditions of the properties? Like, are they all in perfect shape? Or if the tenant leaves, are you going to have to do a boatload of tenant turnover work on the property? I mean, this is not... See, the thing is, investors, I am not a fan of getting inherited tenants in a property. So if I'm going to buy an investment property that's like a tired landlord... Now, let me be clear. Like, what we do at Morris Invest is like we build a brand new property from the ground up. Okay, new construction. With stainless steel appliances in our higher end ones, vaulted ceilings, granite countertops, the whole nine, in great neighborhoods. And then our property management team that we work with places the tenant in the property, a great tenant, criminal background checks, job background check, the whole 9 yards. And then it starts cash flowing. And only then do we then present it to our clients for purchase. That's different. That's not what I'm talking about here. I'm talking about if you found like a pack of 4 properties that there's like a tired landlord who just wanted to sell it to you, Sean. And they're like, but it's already tenanted. I'm always a little leery of that because you never know like the relationship with that landlord and these tenants. For instance, I bought a pack of 10 properties in New Jersey one time. Big mistake, but it was a learning mistake. We ended up doing okay on it, but we bought 10 of these duplexes and ended up, there were inherited tenants in the property. They'd been there a lot of years, according to the owner. We got the ledgers, we got the rent ledgers, all of that stuff. Inspections, everything else checked out. And then what? We buy the properties, and before you know it, these people stop paying rent. They start wanting to leave. We have to go through an eviction process. So I'd much rather start with a clean slate if I can, Sean. I'd find out, hopefully you know the condition of the properties. Exterior is in great shape, newer windows, doors, new roof. Interior has some updates, but it's quite dated, mid-1960s. Kitchen could be updated. If you don't mind putting in the money, that's the time, that's the time. That's probably the time to really raise the rents. Like we just had a tenant turnover on one of our properties in Pennsylvania that I own. And the tenant's moving out, and now the market has shifted where we're going to be able to get another like $200 per month. So in that situation, Sean, I think if it's that dated, that's your best play, is to add value to the property and be able to really bump the rents up when that tenant leaves. You could find out when their leases are up and just talk to them. Say, I'm going to be increasing the rent, but I'm going to be doing a lot of work in the property, and just let them know. I mean, they do this all the time, right? We're going to be increasing the rent, but we're also going to be putting in a new kitchen and all of these things. So let me know if you are willing to stay. If you're not, thank you. Let us know. And then, but we are going to be increasing the rents here because we're going to be doing a lot of work on the property. That would be my in for that. Ethan says, come on, Clayton, it's dirty Jersey. That's for a reason. Buyer beware. Yeah. Let's see. What's the best way to advertise for a rental? For a rental? Well, foot ahead to freedom. I mean, are you going to be the landlord? Like I said, I am not a fan of you being the landlord of your own properties. I'm a big fan of property management. Property management is the way to go. So a property management team will use, Craigslist, different things, different rent, different, put signs up in yards, etc. for rent. And I would let them, but if you are going to do it yourself, I would definitely, I would also look at, we have a link to Landlord Studio is a really good software that'll let you screen tenants, the whole thing. I think it's, does anyone know in our chat here, Lindsay or Kelly or Nicole, do you guys know if it's, we have a link to Landlord Studio. And I think it even does listings, so you can advertise. It has built-in software to do the advertising for tenants. I am sent us hard money loan. Please share what's the best way to be the lender if you have the cash flow. What's the best way to be the lender if you have the cash flow? So you've got money and you want to lend that money out at an interest rate. It depends. A couple of things. Number one, you can go on LinkedIn, list yourself as a private money lender, hard money lender. And you can also put yourself out there on meetup groups, like your local RIA meetings, your local real estate meetup groups, and let them know that you're a lender and you have money to lend. If anybody's working on a fix and flip project that needs cash, let me know. You can put it out, and develop those relationships. Because very often you'll find, I know this to be true, that fix and flippers, they end up working with like one or two hard money lenders for the rest of their life. Like they find a good one that they're friends with and they develop a relationship with them and they keep flipping houses and they keep borrowing that money from that same guy. And that guy's like, wow, this guy, I keep making a great return. I don't need to diversify. I don't need 30 people that I do this with. I only need one or two people. Mickey wants to know about HELOCs on investment properties. Yes. Check out my friend Dan Kraus over at Churchill Mortgage. Churchill Mortgage. We'll have a link in the description for you later. And then also Flagstar Bank. Oh yeah, Nicole, that's a great point too. Nicole mentions you can also join our Financial Freedom Academy and meet investors that are looking to borrow money. We've got people inside of our own Financial Freedom Academy that are actively looking to borrow money. So you can go to financialfreedomacademy.com, join our Financial Freedom Academy. We've got a private Facebook group and just develop those relationships right there, right inside of our Financial Freedom Academy. But right here in the chat, thank you for putting that up there, Kelly. Flagstar Bank, and there's the Financial Freedom Academy as well. Hey, Kesha from St. Louis, good to see you. Yeah, Ethan, you can network right inside of in our Financial Freedom Academy. Kelly Davis says, I have $30,000 in the bank from a 401k. I'm currently not working. Would you advise buying one of your buy and hold properties or doing something like wholesaling to generate more cash first? Kelly, Nicole, I think that's like $30,000 is enough for a down payment, is it not? For one of our properties, 30, 35, right in that wheelhouse. And then that could be cash flowing every month for you. And you're building up your your nest egg. Plus, you're going to get that money back, your down payment back on your taxes, because we'd be able to provide you with a cost segregation analysis. So you'd be able to get that money back through your taxes. So you'd almost be coming out, almost like zero money in the game because you're getting that money back at tax time. And then it'll have a tenant in the property and it'll be cash flowing. And that $30,000 that was sitting in your 401k doing nothing has now bought you a performing asset. So I would book a call with our team. Yeah, just go to morrisinvest.com and talk with us and Kelly, and then we'll set something up personalized for you, and then we can okay. It could be we're right around the 45K mark, but we can walk through that with you. We also have some other options that you can get access to, like on our website, we have a funding tab. So if you go to morrisinvest.com/funding, there's an option there that can get you 0% interest, and it can get you $50, $60, $70, $100,000 in 0% interest as an option. So that's another opportunity. Deirdre says, what is cost segregation? Great question. I love a person that asked me about cost segregation. So I've got a whole video series here. Kelly, maybe you can link it up here in the chat for Deirdre. So we'll have a link here. I want you to watch these videos later. But essentially, cost segregation is a tax. You need a certified engineer, a CPA that is a cost segregation engineer, basically. They fly out to the house, okay? And what they're doing is they're going through and they're accelerating the depreciation on specific things in the house. This is the easiest way to describe it. For instance, instead of just like depreciating the house on your taxes and getting that money, you can depreciate the asset, right? So you get that money back on your taxes. Cost segregation allows you to accelerate that depreciation in certain quadrants of the house, the roof, plumbing, other things that you wouldn't necessarily think you would separate them, but that's what a cost segregation expert does. And if for like our houses, our new construction, there's like a 5-7 year benefit. We get the benefit of improving the roads and sewer. So because it's new construction, those are things you don't get on just a rehab house. And then what happens is we pay for that at our company. At Morris Invest, we pay for that, and it costs thousands of dollars to get a cost segregation analysis done. So we're building 30 homes at one time. Our CPA, who's a cost seg CPA, does them all at once. And then when you buy a house from us, we give that to you for free. And then you take that cost seg to your tax accountant. And now in that tax year, you're getting all of that, almost the entire down payment back on your taxes. Like $45,000 back on your taxes, roughly. I'm just throwing out, I'm somewhere in that range though. Because we've done the homework ahead of time. So that's what, if you're a real estate investor, like Sean owns these 4 properties. Typically, it would only make sense to spend that kind of money when you've got like a few properties. Because what you'd do is you'd fly that CPA out to a location. We used a guy named John and be like, John, okay, you're going to fly down to Texas and you're going to do a CPA, you're going to do a cost seg on these 10 houses. And he'll be there for 2 days, 3 days in a hotel, and you're paying for that. But then when he's done, he'll have cost segregation analyses done on like 10 houses. You take that to your tax accountant for the tax filing that year, and you're going to save a boatload in taxes. So that's just a layman's way of describing it. But bottom line is, like Sean, who just bought these 4 townhomes, I assume he's going to do a cost segregation analysis, right? He'll be able to accelerate the depreciation of those 4 townhomes that he just bought. Sean, I don't know if you're still watching, Sean, or not, but have you done a cost seg on that property yet? Musa Haran, what is the minimum you would recommend house you would want to invest in for rental? Minimum I would recommend. I think, like, Nicole, what's like our minimum lowest price, like single family home in our inventory right now? Like what would... because I like to get higher rents. I like to be in better schools, better neighborhoods where there's better jobs growing. I'm not going to be, so Sean, yeah, you should definitely look in, watch our videos on there. Watch our videos on cost seg. We've got a whole series of cost seg videos, but I mean, 60, 70,000 range is probably going to be a good rule of thumb for a single family. But Nicole's going to check on that for you, like on that price range. Deirdre wants to know, that's an incentive. So do you have to put that tax refund back into your SD IRA if you purchase it out of that? Deirdre, I'm not sure of that answer, and I don't want to steer you wrong. But Haley on our team is fantastic at this. It's what she does all day long on self-directed accounts. I don't know that back into the self-directed account because it's different for every person, because you might not have used, for instance, you can use a portion of your SD IRA and financing. Like you can combine these financial products. So I think it comes out to percentages. But I don't know if Deirdre, have you booked a call with our team yet? If you talk to Haley on my team, just jump on the phone with her for 30 minutes. She'll help you with this. Pete, where can I get money for a down payment if I don't have enough? Go to our funding tab on our website, morrisinvest.com/funding, and see if that's an option for you. You can get 0% interest funding. Oh, Deirdre, you have spoken to Haley. Okay. Okay. I don't know if you have spoken to Haley or not yet, but she can definitely answer you that question. Kelly Davis, that's awesome. Thank you, Don. It says Haley is awesome. She's very informative. Yes, she is. In fact, we've done full videos with Haley here on the channel. We've done all self-direction videos. If you want to check any of those videos out to see Haley in action, she's a genius when it comes to self-direction and real estate. Let's see any other questions. Well, thank you guys. How many of you guys grabbed our bootcamp? I'd love for you to download it and tell us. I'd love to hear your feedback on it. It's totally free again. So go to morrisinvest.com/bootcamp to pick it up to help you on your journey. Much love to all of you. Thank you guys for joining us on this live stream. If I brought you any value at all in real estate, please let me know in the comments below and maybe smash that like button and let me know if I brought you any value at all here. And thank you so much for subscribing to the channel. I really appreciate that. Check out all of the resources we have here. And if you're ready to jump on the call and have a team that can get you a great rental property, brand new construction, cash flowing from day one, we've got amazing lenders that we work with right now. Take advantage of this incredible money that's available. It's almost 0% interest at this time. Holy smokes. Jump on the phone with us at morrisinvest.com. We'll take great care of you. Much love to all of you. Thank you guys for joining us today, and we will see you back here again next week.